US Taxation, net operating losses. So net operating losses, the short form used is NOL, net operating losses. We call it as NOL. So what is net operating losses? A net operating loss is the excess of business tax deduction of the tax year over its taxable income for that year. Say for example, your gross income is $1 lakh or $100,000, and your total tax deductions are $125,000. Then you have a net operating loss of $25,000 for the tax year one. Generally, a net operating loss is an excess of deduction for expenses and pertaining to business over income which is being generated from by the business. For individual, an NOL may also be attributable due to casualty loss as well. So, which taxpayers are allowed to deduct net operating loss? Individuals, C Corp, estate and trust, exempt organizations with unrated business taxable income, participants in a common trust fund, insurance companies, personal holding companies under certain circumstances. So these are the entities which are allowed to deduct net operating loss from their return of income. And which entities are not allowed? So partnership, S corporations, since these are flow-through entities, there are different provisions for these entities. So these entities are not allowed to deduct net operating loss. And then regular investment companies, corporations subject to accumulated earning tax and common trust fund, because there are other provisions for these entities, so these entities are not allowed to so how to calculate net operating loss? For individuals, it could be the formula is whatever is your gross income, calculate as per the IRS rules, and then you need to deduct tax deductions which are applicable, and if the net amount is negative, then it is a net operating loss. So net operating loss is disallowed for an annual carryback or carry over from another tax year. So you cannot actually just use net operating loss as a deduction of previous year or next year. The deduction of business and non-business capital loss is limited to the amount of capital gains. So in case of capital loss can only be offset against capital gains. The deduction of non-business deduction is limited to the amount of non-business income. If it is if loss is due to non-business activities, then that deduction is allowed up to the limit of non-business income only. The exclusions of capital gain from small business stocks under section 1(2)(2) is not allowed, and under section 199 a deduction of qualified business income is disallowed. In case of individuals, net operating loss may also occur due to say casualty and theft, and it is not necessary that person has to be engaged in some business. So in case of corporations, net operating loss is calculated in same way: gross income minus corporation's deduction or whatever are applicable, and modified based on these three conditions. So the first is the annual deduction is disallowed for an annual carryback or carry over from another tax year. The dividend received deductions under section 243 and under section 245 are computed without regards to the aggregate limitations that normally limit these deductions. And the deduction for foreign derived intangible income is also disallowed. So once you modify all your deductions for A, B and C, all those deductions minus gross income, if gross income minus all the deductions, if the number is negative, then it is a net operating loss in case of corporations. So what is the change? What are the updates with reference to net operating loss? So the Coronavirus Aid Relief and Economic Security (CARES) Act It was enacted on March 27, 2020, to provide a wide range of benefits to businesses and individuals adversely affected by coronavirus pandemic. Among its many business tax relief provisions, so CARE Act amended the net operating loss rules as well. Because there was one more amendment which was under the Tax Cut and Jobs Act in 2018. So what has happened in 2018 was that was pre-COVID period. The TCJA, which is the short form of Tax Cut and Job Acts, eliminated net operating carrybacks and permitted net operating loss to be carried forward indefinitely. So earlier it was allowed to carry back up to 5 years. Now, as per TCJA, we cannot carry back, but we can carry forward it indefinitely. And earlier it was only allowed to carry forward for 20 years. The CARES Act changed those rules temporarily by permitting net operating loss incurred in 2018, 2019 and 2020 be carried back for 5 years to the earliest year first, and then suspending the 80% taxable income limitations through 2020. So one of the condition in TCJA was that you can only deduct 80% of the taxable income if you have to offset the net operating loss for any specific tax year. So that condition of 80% was also eliminated in case of 2018, 19 and 20 by the CARES Act. So the CARES Act, which amends the Internal Revenue Code and provides for the carryback of net operating loss arising in taxable years beginning on and after Jan 1, 2018 and before Jan 1, 2020, so that which is typically 2018, 2019 and 2020. So each of the 5 taxable years preceding the year in which the loss arises. So we can go back up to 5 years, but we have to use the entire 5 years period, starting from the first available year where we can offset the net operating loss of for the year 2018, 2019 and 2020. Taxpayer take into account such net operating loss in the earliest taxable year to which it may be carried back. So code section 172B3 allowed taxpayer to elect waiver, the carryback of net operating loss arising in a taxable year. So carryback was optional here, and in addition, CARES Act allowed taxpayers to elect to waive the carryback to the specific years in which the taxpayer has code section 965 inclusion. So we'll talk about 965 in detail. So before we look at the CARES Act, we should first understand what was the change which has happened because of introduction of TCJA. So the Tax Cut and Job Acts changed the rules for deducting net operating loss in 2017. And before 2017, it was like NOL was fully deductible and could be carried back up to 2 years and carried forward up to 20 years. In 2017, TCJA changed the NOL rules and said that they limit deduction up to 80%. So only 80% of taxable income can be offset with the net operating loss. They disallowed carrybacks. They said that you cannot carry back your net operating loss. So carryback was not allowed. And earlier the carryback allowed was 2 years. So they have removed these 2 years of carryback in TCH. And then they also said that okay, we'll not even have any limits on the carry forward for 20 years. So they have removed this limit of 20 years. So so the limit as per TCH is indefinite. So you cannot go back, but in future you can offset your loss indefinitely. There was no limit of 20 years as per TCH. But due to COVID, business were impacted, and then that's the reason why in 2020 CARES Act came into place, and it temporarily provided some retroactive changes to the net operating loss rules again. So this is the summary. So if say net operating loss is pertaining to 2017, then you can carry back up to 2 years, that is optional, and you can carry forward up to 20 years, and the percentage of taxable income that can be offset, so that is 100% here. So this is the condition before TCJA. Then as per TCJA, from 2018 there were provisions were applicable, but then due to CARES Act these provisions were changed for the specific period of 3 years. But as per TCJA, you are not allowed to carry back anything, so no carryback option is not available. Carry forward is indefinite, but you can only offset 80% of your taxable income that can be offset. And as per CARES Act for 2018, 2019 and 2020, you can carry back up to 5 years and you can carry forward indefinitely. But what happens here? So in case of carryback, you can use the 100% of the taxable income to carry back, and you have to start from the first available year of these 5 years. And similarly, you still have a net operating loss you have carried back and offset that loss with like past 5 years, considering 100% of the positive number in last 5 years. Still you have something remaining, then you can have an indefinite carried forward period, but here you can offset up to 80% of the taxable income. So this table is the most important table in this concept. This summarizes all the entire concept in a very summarized one pager summarized manner. So there is an exception for farming. So in case of farming and non-life insurance companies, they can even use this 2 years of condition even as for TCH. So this is the most important table. You should note this down, and understanding this table should be sufficient to understand the concept of net operating loss. So how did COVID related tax relief act further impact NOL? So the COVID related tax relief act allowed farmers to elect 2 years NOL carryback. Before the CARES Act, to elect to retain the 2 years carryback rather than claim 5 years carryback provided in the CARES Act. It also allowed farmers who previously waived an election to carry back an NOL to revoke the waiver. So these provisions applies retroactively as if included in the CARES Act. Now, now let us understand more. So this is theoretical part which we have already summarized in form of a table, but we'll again go through it because there are some important hidden points over here. So under the CARES Act, an NOL for tax year beginning from 2018, 19 and 20 can be carried back up to 5 years. Taxpayer don't have to carry back their 2018, 2019 and 2020 NOLs. So that's carryback is optional again, but if they want, they can go up to 5 years. They can elect to waive the carryback period and only carry these NOLs forward for future years. So for future years, it is indefinite. Under the CARES Act, taxpayer that carry back their NOL must use the entire 5-year carryback period. So they need to use the entire 5 years of carryback period. This is very important. For example, taxpayer cannot elect to use 2 years carryback period instead of 5 years carryback period for their 2018, 2019 and 2020 NOLs. So they can just choose 2 or 3 years randomly. It has to be 5 years. The first 5 years carryback provision goes away for tax years beginning in 2021. So 2021 CARES Act was a temporary arrangement, so that was not applicable from 2021 onwards. So we are again back to the TCJA provisions from 2021 onwards. So what happens here? The NOL generated in 2018, 2019, 2020 are still subject to TCJA 80% of income limitation if they are carried forward to the year in which limitation applies. So we have seen previously here that if this loss of these 3 years cannot be offset using carryback and you want to carry it forward, then the period is indefinite. But in this case, 80% of taxable income can be offset in case of carry forward. So that is what it is. However, annual generated in 2018, 2019 and 2020 are not subject to 80% limitations. So for these 3 years, this 80% limitations is not there. So which are the taxpayers covered by the CARES Act? So C corporations, individual, estate and trust, tax exempt organizations with unrelated business taxable income can take advantage of CARES Act and carry back. A real estate investment trust cannot carry back an NOL to any preceding tax year. Additionally, an NOL generated in the tax year during which taxpayer was not real estate investment trust, non-REIT year, cannot be carried back to the year in which taxpayer was REIT. So this is a specific provision in case of real estate investment trust that they cannot carry back NOL to the preceding year, to any preceding year. So, and even they cannot, if the status has been changed from real estate investment trust to non-real estate investment trust, so we cannot offset the losses of the two different status of the same trust. CARES Act exceptions to this rule is the exception allows certain taxpayer with untaxed foreign income for certain specific corporations to exclude tax years with code section 965 income from their carryback period. So we said that we'll look at section 965. So what is the exception in case of 965? So what happens is that the entities which do have foreign earnings, untaxed foreign earnings, so they are covered by the section 965 of the code. So in that case there is an exception, because since they can elect to be taxed in certain methodology, so there is an exception allowed to them. The exception allows certain taxpayers with untaxed foreign earning for certain specific corporation to exclude tax years with code 965 income from their carryback period. So if we go 5 years back and in one of the year you had section 965 income, then you can skip that year so far as offset of losses for previous 5 years is concerned. So that's an exception to the rule. Partnership and S corporations cannot take advantage of the CARES Act because they are pass-through entities, so it's logically not applicable to them. Again, there are different provisions in case of partnerships and S corporations. We talked about it earlier in this video. So carryback is optional and carry forward is indefinite. Under CARES Act, a taxpayer must carry back an NOL generated in 2018, 19, or 20 to the earliest year in the 5 years carryback period. If the earliest year taxable income cannot absorb all part of NOL, then the taxpayer carries forward any remaining NOL to the next carryback year with taxable income and so on until the NOL is all used up. So if somebody is having loss in 2018, then they can go back like 2018 minus 5, and then from that year they'll start offsetting the loss. If loss is very high, then even after offsetting that for say 1 year, uh, it still there is a balance remaining in the NOL, then it can be taken to the next year and next year and next year, likewise it could come up to 2017, and then still you have some loss, then you can carry it forward indefinitely. So under the CARES Act, business can still carry forward NOL indefinitely. Indefinite NOLs are NOLs generated in tax year beginning after 2017. The indefinite carry forward period includes any NOL from 2018, 19, 20 that remain after they are carried back to the years in 5 years carryback. So whatever is the balance after carryback, uh, if you are exercising the carryback option of 5 years, and even after offsetting all the losses of the last previous 5 years, if there is balance in NOL, then that can be carried forward indefinitely. There is no limit on carry forward number of years. So what are the benefits of carry back and carry forward? So this is a very important slide, uh, and this is what you should understand as a part of your tax planning. So if you know that TCJA, which as the name suggests is Tax Cuts and Job Act, so the key feature of this law was it has reduced the tax rate for corporations from 35% to 21%. So that is where lies the crux of this benefit. So we'll just go through the entire provision, and then I can explain you in detail. The taxpayer shall evaluate their tax position and tax computation of previous years, and based on the same shall decide to take benefit of carryback of the NOL using the CARES Act rules. Okay, so you should go back, check the last 5 years of tax computations, and then decide how we can use the NOL rule. Because now if you go back say to 2017 and the tax rate was 35% there, so what you can do, you can offset your 2018, 2019 or 2020 loss with say 2017 or 2016 or 2015 or 2014 or 2013, and where the tax rate was about 35%. So if you offset those losses, what happens is that the 35% uh, you'll get the refund of amount of the tax which you have paid at the 35% rate. And now if you are going to carry it forward, so for the next year, starting from say 2018 onwards, the tax rates has reduced up to somewhere around 21%. So you have low tax rates for carry forward, and you have high tax rate for carry back, and then you can go up to 5 years. So you can imagine that how the CARES Act has benefited here, because instead of having say 2 years of carry back, it is providing 5 years of carry back. And then this was a period where the tax rates were very high. So if you're offsetting your loss with the previous 5 years, your refund is going to be high. And that's the catch, and that's the part of tax planning that you should understand as a part of CARES Act. So generally using the 5 years carryback will be better for C corporations, because they can carry back post TCJA net operating loss to offset higher tax income. Pre TCJA income was taxed at higher rates. The TCJA reduced the highest tax rates for C corporation for 35% to 21%. Carryback can generate a refund for period year, even if that tax year is technically closed by statute of limitations. However, we should note that the carryback and NOL to claim refund requires filing of an amended return or a tentative refund application, and this may expose you to the risk of audit, which is like for the year which is otherwise closed. Uh, so we'll see what has to be done. So annual carryback, you get refunds. So taxpayers have two options here: either they can amend their returns or they can file a tentative refund claim application. So what's the benefit of filing refund claim application is that the filing of tentative refund claim applications typically results into faster refunds, because it is a refund claim application itself, as the name suggests. So which are the forms? So for corporates, it is form 1139, which is corporation application for tentative refund, and for non-corporate entities it is form 1045, which is application for tentative refund. So refund claim cannot be filed if you have not filed your tax returns for the year that generated the net operating loss. So you need to first file your tax return. Refund claim must be filed within 12 months of the end of the tax year that generates the NOL. IRS has a 90 days period to conduct a limited examination or review the application for omission or error, and can either allow or deny the application. So once you file the refund claim, within 90 days IRS has a time to examine that or review that. If there are any errors or some more information is needed and all, so they can assess that application, and then they would allow or deny that application, but they have to do that work within 90 days with filing. Now here is the catch, that these are the generic provisions for filing refund application, but now uh, the CARES Act has amended law retroactively for 2018, 2019 and 2020. So you might have a question that how I can file my refund application within say 12 months from the end of the tax year that generated the NOL. So for that purpose there are additional provisions here. So CARES Act provides a special rule that with respect to net operating loss that arose in taxable year that began before Jan 1, 2018 and ended after December 31st, 2017. The code section 6411 application will be considered timely if filed within 120 days after March 27, 2020. So why March 27, 2020? Because CARES Act came into effect from this date. So you have somewhere around 120 days, which is 4 months of time to file your tax refund applications for the carryback period. So, uh, so uh, we have actually touched upon all the provisions of the net operating loss. For certain clarification, IRS has published certain FAQs, certain guidance, so you should go through it in detail. It's available on IRS website, and with that, I think if you have any specific questions, then that would be beneficial for you, because these FAQs are quite simple and explanatory. So there are two kinds of FAQ which are there, and the first is for the taxpayer who had section 965 inclusion. So when I say 965 inclusion, it is about the foreign income related entities. So there will be certain differences in those cases. So there are certain FAQs on that part, and then there are FAQs on the part which was pertaining to alternate minimum taxes. Uh, so yeah, alternate minimum taxes. There were some questions which taxpayers had. So for these specific cases, there are FAQs available for these two types of uh, say specific categories. And then there are certain say temporary procedures due to COVID which were uh, there, where IRS had allowed taxpayer for a period of time to send form 1139 or form 1045, which is nothing but the refund application through fax. So what has to be sent via fax, so that has been explained over here, like what are the things that you need to attach to claim this refund, what is the information that IRS would need to assess your claim. So with that, uh, we are